Good morning, students. How are you all? All are good? Okay. Shall we learn today accountancy? I think you have completed all the exercises that I have given to you, and two chapters we have completed. The last two problems we will do later. Today I am going to teach you the third lesson, accounts of partnership firms, that fundamentals. It is regarding partnership firms, isn't it? So we should know something about the partnership. I think you have studied this partnership in commerce in 11th. So here, what is a partnership firm? It is a type of organization, isn't it? Forms of organization, different forms of organizations are there. Sole proprietorship form of organization, then partnership, then joint stock companies, then cooperative societies, then public undertakings. One among them, the second one is partnership firm. So it is a form of organization, isn't it? Organization. And how many people are needed for that one? Minimum 2 or more. They join together and they run a business, isn't it? 2 or more people join together, they will agree. There will be an agreement regarding the business, regarding the type of business, and the profit sharing ratio. Because any business is done in order to earn profit, isn't it? So when they earn profit, because if that is sole trader organization, there is no problem, because only one person is running the whole organization. He is the owner, he is the manager, and he is all in all, and whatever he gets as profit he is enjoying. And if he incur any loss, that is also borne by the same person. But here, since 2 or more persons join together, they should agree how to do the business and how to share the profits or losses. Okay. Here, that they carry out one business, isn't it? One business is carried out by them, and the result of the business, either it may be profit or loss. So the loss or profit is shared by them. Okay, in the profit sharing ratio or capital ratio, different ratios are there. Capital ratio, in which ratio they are investing in the business. If one person invests for 1 lakh, the other person invests only 50,000, they will share. Here 1 is to 2, here 2 is to 1. If they get 75,000 profit, what they will do? The first person will get 50,000, the next one will get 25,000, isn't it? So in that ratio or equal ratio also they can share. Understand? Equal ratio, both, irrespective of the amount invested by them, they will share equally, because they may work equal, so they may share equally. If it is 50,000, both will share 25,000. Okay, that 1 is to 1. So now the persons, those who join and start a business, they are called the partners. Okay, we are using this in our day-to-day life, isn't it? We use this term, partners. They are partners. If they run a business, 2 people are partners. Maybe your parents may be running a business with your relatives as partners, isn't it? So the persons, those who join together and start the partnership firm, is called partners. Then all the partners together, they do the business, isn't it? That business is called firm. Business is called firm. That is why it is called partnership firm. Understand? Then all the partnership firm, they had one name, that is firm name. That means their organization name, we say no Pothis, that their firm name. If it is partnership, if it is limited companies, that is maybe the name. Understand? So firm name also will be there. Then why this form has come into existence? Because the first form of organization is what? Sole trader organization. Isn't it? Only one man will be there, or one person, either man or woman. One sole trader organization, only one person, and he will invest. So he is the owner and he is the one who manages. So he may be the manager and he is all in all. Okay, he is the accountant. If he maintains accounts, he is the accountant. Then everything, he is the everything. But why this partnership firm came into existence? Because the sole trader organization has many limitations. What is the meaning limitations? Many drawbacks. Okay, many drawbacks it has, because only one person is there. He is the one who is investing the capital or amount. From where he will invest? From his personal properties, or he can borrow from his neighbors. But beyond one limit, he is not able to invest more amount for this purpose. Then he is the manager and he has to manage. He may not have that managing abilities. So he could not manage the organization efficiently. Then accountant, he might not have studied this commerce candidate. Okay, he is not a commerce candidate, so he may not know how to prepare the books of accounts. He has not studied the accounting principles, isn't it? So he may not have full knowledge of preparing books of accounts. So all these drawbacks he has. So he can include some other persons in his business and he can change that organization into partnership organization. Okay, that is why all these drawbacks are overcome under this partnership firm. Okay, now we will learn the meanings. Meaning and definition. Okay, what is the meaning? That we have studied, isn't it? When two or more persons join together. Okay, when two or more persons join together to form a business. To form a business. To form a business. To share profit or loss. To share profit or loss arising there in the agreed ratio. What we have learnt only. Okay, in the agreed ratio. That's why I am writing like this, like hints. Okay. Then the relationship among them is called partnership. The relationship is called partnership. The how they run the business. Business is carried on by all. That business is carried on by all, or any one can act for all. Even any one person can work for everyone, or everybody can work. Okay, that is the meaning. So here one definition is given. I will show that one. I will explain. Okay. That definition, it is the 2 marks question, first one. Okay. According to Section 4 of the Indian Partnership Act 1932, Partnership is defined as the relation between persons, okay, relationship between persons who have agreed to share the profits of a business carried on by all. That business is carried on by all or any of them acting for all. I think you all are having your book also in front of you. So you can keep the book and read. Okay, I am explaining. It is very simple. That's why I am showing in the book. Okay, according to section 4 of the Indian Partnership Act. So this is that you will learn whether it is registered, because one act is there, Indian Partnership Act 1932. Partnership is defined as the relation between persons. These persons have agreed to share the profits of a business. Then that business is carried on by all or any of them acting for all. Understood? Now the definition. Now the features. What are the features in the partnership? Here 4 features are there. Here this is also one of the question answer. Okay, the Roman number 3 mark question answer. What we have studied in the definition and meaning only, coming the features. Okay, partnership is an association of how many persons? 2 or more persons. Here we should learn how many numbers, that maximum number of persons. Maximum number of partners is limited to 50. Okay, 1 mark they may ask. Okay, that you should learn. Features also one of the question answer, you learn this one. It's very easy, that's why I am showing in the book, because we need to complete this syllabus by November. Okay, it is very easy, this lesson. Okay, so this fundamental is very easy if you listen little bit. Okay, there should be an agreement among the persons. That must be an agreement among the persons for what? To share the profit or loss of the business. Then the agreement may be oral. Oral means what? In speaking, isn't it? Written, writing in a paper, or it is understood. Okay, they will not speak and they will not write, but it is understood. They are doing their own business. That will be understood. That is implied. Then the agreement must be for what? That agreement they have to do to carry on a business. Understand? They have to do one business, and the agreement is for what? To share the profits of the business, for nothing else. Any illegal activity they may not do. Understand? That's it. The business may be carried on by all the partners or any of them acting for all. Everything we have studied in the definition only. Have you understood, students, this features? If you find it difficult, then you call me. Okay, feel free and call to me and ask. If you don't understand, I will explain in person. Okay, students. Next heading is partnership deed. What is partnership deed? It is nothing but the agreement. We have learned, they will write an agreement. It may be oral, written or implied. That is called the deed. Okay, that is the partnership agreement. So it is a document, we can say, because it will be in writing, isn't it? So partnership deed is a document in writing. Usually they have to write and give. For any further reference or any clarification, it will be better in writing. So document in writing that contains the terms of the agreement. The terms will be there. Okay, the terms of agreement among the partners. Among the partners. So that's why I told you, partnership deed is nothing but the agreement. So partnership deed is a document in writing that contains the terms of agreement among the partners. Okay, I think this is also one of the very short answer. Okay, second, that one point. Okay, Then what is the next point? Here it is not compulsory to write a partnership deed. Okay, in India it is not compulsory to have a partnership deed. Okay, as per the Indian Companies Act, 1932. It is very easy lesson only. If you listen, it is very easy. Understand? But the third point you can write related to this one. It is not compulsory, isn't it, for a partnership to have a partnership deed as per the Indian Companies Act 1932. But it is desirable. It is good. Why? Because this I told you, it is the evidence in among the about the terms of agreement among the partners. So it is desirable. It is that is advisable. It is desirable to have a partnership deed. Why? For any further clarifications, because it is an evidence. If anyone say that the partners may have some quarrel or that confusion, isn't it, because of their understanding, if there is any confusion among them, then they can show that partnership deed, it is written like this, they have agreed. Okay, all the terms of agreement is written. So it is desirable to have a partnership deed because it is saving as the, it serves as a evidence. Understood? These 3 points you can write, 2 or 3 points you can write. Okay, that is partnership deed. It is also one of the 2-mark question, second one. Okay, then the contents of partnership deed, what and all will be there in the partnership deed. It is very easy. First one, name of the firm and nature of the place of business. Okay, many are there, around 16 are there. I will, no need to waste our time, I will show it in the book itself. Okay, you just, they have asked around 6 only for a 3-mark question. Okay, this is also 3-mark question. So some of the theory portions are there today is for you to study. Okay, one illustration also we will do. Contents of partnership deed. First, name of the firm. Okay, name of the firm, then nature and place of business. Nature of business and place of business. Okay, first, what if you someone ask our details also, first we will write our name only, isn't it? So remember the first one, name of the firm and nature and place of business. What type of business and where they are conducting that business. So what is the first one? Name of the firm and nature and place of business. Okay, then second one, date of commencement, when they have started the business, that date of commencement, when they are starting, and duration of business. If some business they may come to, they can complete their business within 2 years, 5 years. Okay, it's as per the business, or that duration of the business also must be entered. Date of commencement and duration of business. Then the third one, about the partners. Okay, first 2 about the business. Third one, names and addresses of all partners. Names and addresses of all partners. Then next one, what they are contributing, capital. Capital contributed by each partner, how much each one has contributed. Then the important one, profit sharing ratio. Then amount of drawings, you know, isn't it? What is drawing? The amount withdrawn by each partner from the business. Okay, some that each person can withdraw some amount from the partnership firm, that is allowed, that is a given, that one. Amount of drawings allowed to each partner. Above that amount, a partner cannot withdraw, cannot take from the business. Okay, so amount of drawings allowed to each partner. Then rate of interest to be allowed on capital. That means rate of interest on capital. Then rate of interest on drawings. Both. He has capital, he is contributing. For that, what is the rate of interest? Then when he withdraw money that from the business, that is drawings. So for that also amount will be charged. Okay. So rate of interest on drawings. Then some partners will give loan to the business. So for that amount, the business has to give interest. That is rate of interest on loans provided by partners. Then some partners may work a full time in the partnership firm, so they can provide salary for him. So amount of salary to be allowed to any partner. Then at least 10 you study and keep. Okay, the remaining you must know. They're very easy only. Maintenance of accounts. Sometimes they may ask for the twisted question, that compulsory question, they may ask you whether this maintenance of accounts and audit procedures are entered in the partnership deed. Yes or no. For 2 mark question, compulsory question, they may ask. Okay. So you must know what it is. So just read all the contents of the partnership deed. Okay, maintenance of accounts and audit procedure. Then procedure for admission of a new partner. This is one of the lessons that we are going to learn. Okay, admission of a new partner. Everything is lesson only here. That capital, how much that invested, then amount of drawings, rate of interest. We will calculate the interest on capital, interest on drawings, interest on loan is not, we are not, but we will write in the capital accounts. Okay, everything we are going to learn only. Then admission of a new partner, procedure for admission of a new partner. So because they can admit the maximum of 50 members. So often they may admit some partners. So admission of a partner. Then if one admitted, one may retire from the partnership firm. So procedure for retirement of a partner. And when they retire, we have to settle their dues. Okay, that we are going to learn only. Okay, there you will understand very clearly. Settlement of dues to the retiring partner. Then method of valuation of goodwill. When we at the admission time and retirement time, we have to value the goodwill. Okay, then we should value the assets and liabilities at the time of admission, retirement or death of a partner. That also must be stated in the partnership deed. Then appointment of executors. Who is the executor? If a partner dies, another person, maybe the nominee we say, no, that will be the person, executor, or all he has to come to the court, legal executor we will say. So that the executor, appointment of, we need to appoint one executor in case of death of a partner, and settlement of dues to the legal heir. Legal heir means after the death of that partner, all the profit sharing ratio, then the capital investment must be handed over to his legal heir. That means his wife or children, isn't it? So that also should be stated to whom it should be given. Okay, appointment of executors in case of death of a partner, then a settlement of dues to the legal heir, everything will be entered. Then settlement of accounts on dissolution of the firm. What is dissolution of the firm? When they close the business, that is the winding up the company we say, isn't it? So company, if we close, that term is winding up of a company. But if we close the firm, that is called dissolution of the firm. So when the business comes to an end, that is called dissolution of the firm. That time, how to settle the accounts? So when they are starting, it is the nature, name of the firm, everything, and ends with settlement of accounts on dissolution of the firm. In between, any points you can write. They may ask around 6. Okay, you have to write. Okay, you learn this one also. if that partnership deed is there, they will mention all these 16 items there, isn't it? But some partnership, they may not have the partnership deed. Okay, no agreement, no partnership deed. Then what they have to do regarding the capital, interest on drawings, then profit sharing ratio, what they have to do? No, first one regarding the remuneration, salary. Okay, remuneration to partners. Remuneration to partners. Here, if there is no partnership deed, what is applicable, the provisions of Indian Partnership Act, Indian Partnership Act 1932, as per its provision only, they have to carry on their business. Okay, regarding these items, that remuneration, then interest on capital, interest on drawings, everything, they cannot do as they like. Okay, so remuneration to partners, what is the meaning? Salary to partners. What they have to do? They have not given any, they have not mentioned that one in the partnership deed. What they will do? They have to, they may not give any salary. Understand? If it is not mentioned anything about the remuneration or salary to partners in the deed, so they have not prepared any deed, then what they should not give? Any salary. No salary should be given to any partner. Understand? So this is as per section 13A. They will not ask even, but we should know. Okay. Section 13A of the Indian Partnership Act 1932, if there is no partnership deed, or even sometimes in the deed they might not have mentioned about this remuneration. Okay, either they may not have the partnership deed or this item is not mentioned in the deed, then they should apply this section of Indian Partnership Act 1932. What that section says? No salary should be given to any partner. Okay. Then the second one related to profit sharing ratio. We have learned that profit sharing ratio is agreed ratio, isn't it? But now there is no partnership deed, or they have not mentioned anything about the profit sharing ratio. Then what is the section of section 13B says that the profit must be shared equally. Understand? They must share the profit equally. Only one sentence you should remember. Here they will ask some one exercise, one illustration and exercise is there. Okay, you have to remember only this one. If remuneration, no remuneration. Okay, remuneration means salary. No salary will be given. Profit sharing ratio is shared. That there is, if there is no profit sharing ratio, what they should do? They have to share equally. That means 1:1. Understand? If 3 partners, 1:1:1. If it is only 2 partners, 1:1. Understand? That way only they have to share the profit and loss. Okay. Then the third one, interest on capital. Interest on capital. Very simple. Okay, this one. Interest on capital, that is section 13C. So if you keep in order, first salary, then profit sharing ratio, then interest on capital. Section A, B, C. All the section 13 only, subsection A, B, C. What it is saying? Here, they should not provide any capital. interest on capital. No interest on capital. And okay, if there is no partnership deed, there is no interest on capital. No interest. Okay, no interest on capital. But if it is mentioned in the partnership deed that they can pay interest on capital, then what they should do? If there is enough profit, okay, from the out of profit only they have to give interest on capital. But if the business is not having, if the business is having loss, but that interest on capital can be given to the particular partner is mentioned in the partnership deed. So what they can do? They should not give interest on capital because that business concern is not having profit. Okay. If there is loss, no interest on capital. But if they have enough capital, okay, then they can give interest on capital. But if it is not mentioned in the partnership deed, no interest on capital as per section 13C. Fourth one, interest on loan. Indeed, we have studied, isn't it? Interest on loan advanced by partners. Here it is section 13D. Okay, section 13D. So what? If a partner has given loan to the partnership firm, he can get interest on loan at 6%. Only this is given. Okay, all the other no. Okay, interest on loan as per section 13D, only 6 at the maximum 6% interest can be allowed. Okay, for the partner on his loan. Then interest on drawings. Interest on capital? No. Okay, interest on loan only 6%. Now, interest on drawings. Here that section is not given. Okay, interest on drawings as per the equal to interest on capital. Here also no interest on drawings. Understand? No interest on drawing is charged on the partners. Understood now? 5 items only you have to remember. These 5 items are one of the question answer. That one 3 mark question. 3 mark question, fourth one. Okay, the application of the provisions. So 5 items are there. First one, remuneration to partners. No salary will be given. For remuneration to partners, section 13A, no salary will be given to any partner. Then about the profit sharing ratio, next one, section 13B, if it is not agreed, they must share the profits or loss equally. Okay. Then interest on capital, no interest on capital is given. But if they have agreed in the partnership deed, if there is profit only, they can get interest on capital. Interest on capital is given from the profit. Okay, not as it is not considered as the business expense. But if there is profit only, they can be given. Interest on capital will be given up. But if there is loss, no profit will be given. Regarding the interest on loan that is advanced by the partners as per section 13D, only to the maximum of 6% of interest can be given to that particular partner. Okay. Then interest on drawings, there is no interest on drawing is charged for the partners. Understood? Only interest on loan 6%, all the other no. Then the profit sharing is equally. Only these two you have to learn. Only interest on loan 6%, profit sharing ratio equal. All the other things no. Okay, if you know this one, we could do the first illustration. Illustration 1. A, B, C and D are partners in a firm. There is no partnership deed. How will you deal with the following? A has contributed maximum capital. He demands interest on capital at 12% per annum. The only thing you should understand, should be very particular about the deed. There is no partnership deed. Okay. So he is asking, A is asking for 12% interest on capital. Then B withdrawn 1000 per month. Other partners ask B to pay interest on drawing at 10% per annum. But B is not agreeing. Then loan advanced by C 10,000. He demands interest on loan 9% per annum. A and B do not agree with this. Then D demands salary at the rate of 5,000 per month because he spent full time for the business. B and C do not agree with this. Then fifth one, A demands the profit to be shared in the capital ratio, but B, C and D do not agree. Okay. Now we will discuss this one. That what we have learnt. Okay. A is maximum capital. What is regarding the interest on capital? Interest on capital? No interest on capital is payable to A. Understand? So interest on capital is not given to A. That's all. Then B. B has withdrawn 1000 per month, isn't it? So any interest on drawings? No interest on drawings is charged for B. No, because no interest is on drawings can be charged, isn't it? But only loan advanced by C. They are asking, he is asking for 9%, but only which percentage he can get for the loan amount. For his loan amount 10,000, he can get only 6%. 6% into 10,000 by 100, he will get only 600 rupees. Okay, not 9%, but only 6% on 10,000. He can get only 600 as interest on loan. Then D demand salary. No salary will be given to D. That's all you have to write. Okay. Then A demand the profit to be shared in the capital ratio. No. He has to, because he has contributed more. That is why he is asking, isn't it? So profit must be shared equally. That's what you have to write. Okay. Shall we see the exercise? In this exercise, first one, that is given as if that is given in the illustration 1. Okay. Akash, Pala, Chandru, Daniel partners. No partnership deed. Akash has contributed maximum. He demands interest on capital 10%. So you can write as a sentence. Okay. Everything is given in the answer itself. So you have to understand that is what for the test there won't be any answer here. Okay. You forget about this answer and you try to understand and write this answer as the answer there. Okay. So the same thing what we have explained in the illustration. So only this one you do in the classwork notebook and study the question answers that I have marked to you. Okay, students. So we will do the problems tomorrow onwards. Okay, you do this exercise one alone in your classwork notebook. Okay, thank you, students.